Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, the markets have come under selling pressure when we talk about the Nifty and the Sensex right now. Both are under pressure, about 1% loss for the Nifty, 21,985 for the Nifty right now, and the Sensex hovering near 72,447. That's a loss of almost 650 odd points. The mid and the small caps are seeing greater amount of pressure today. It's the mid-cap 100 index down, that slipped about 1.7%. Remember, at the day's low, it was down over 2% as well. The small caps down by 1.7% as well. And when we talk about the sectoral moves, all the sectors of the Nifty are down in the red today, with some of the sectors really coming under severe pressure. So media, for example, is down nearly 3%. PSU banks are down by 2.4%. Realty down by 2.4%. A 1.5 to 2% decline on the oil and gas index as well. And even the auto space and the Nifty bank is also down by over 1% as well. So several sectors, all the sectors are down, but these were the ones that were down deep into the red as well. In case you have to look for the green, it's perhaps only in the India VIX when we talk about the major indices that we track. So that's up by 3.6% in trade. In terms of the stocks that are under loss on the Nifty, you do have stocks like Power Grid, for example, that's at a loss of 4.2%. Apollo Hospitals, Bajaj Auto, Eicher Motors. These are some of the stocks that are under pressure. Asian Paints, Tata Steel, BPCL. These are the other stocks that are on the losses side when we talk about the kind of stocks that are under pressure on the Nifty. Of course, a lot of banking majors that are dragging the street as well, because the Nifty bank overall is on a declining trend. Then we also have from the F&O space a lot of stocks that are seeing some dips come in, say HPCL, REC. Then we also have Apollo Hospitals. Apart from this, Adani Enterprises. You have Tata Steel, BPCL. These are the F&O losers at this point in time. So what is the key factor behind this loss? That's something that we all want to understand. And joining us now on this special edition is Ruchit Jain, lead research analyst at 5paisa. Ruchit, good afternoon to you. Tell us, what do you make of this loss? Because we had opened up steady, but we could not sustain those levels. Is it the ahead of expiry kind of a pressure that you look at into the markets? Is this going to be an extended one, or are we again going to see markets bounce and this is going to be an opportunity for buy on dips? How would you explain the current dip in the markets?
Yeah, hi, very good afternoon, Sakshi. Sakshi, if we look at last 2 days momentum, the market breadth especially is hinting that we might be looking for a pause in the short term within an uptrend. So whenever market goes through a stage where some sort of profit booking takes place, either there is some time-wise correction where the markets enter into a consolidation phase for some time, or some price-wise correction which retraces the recent up move. Now we are anticipating that in case if the Nifty gives a breakdown below this 21,950, then I think that would be a first signs that some price-wise corrective phase could be there in the near term. Otherwise, some time-wise correction is possible where index would trade within this broad range of 21,950 to 22,000 would be acting as a support, and on the higher side 22,200 to 300 range would act as a resistance. Now just from a day or two perspective, a lot of call writing has taken place in today's trading session, whether you look at the Nifty or Bank Nifty data, and 22,200 call option has about 1.87 crores of open interest outstanding. Even in last half an hour, 1 hour, 22,100 call option also has seen decent writing taking place. So when call writers are too aggressive, I think the upside from next 1 or 2 days perspective should be limited, considering that writing has taken place. So we are a bit cautious on the markets, expecting some corrective phase. Now, if Nifty closes below 21,950, then we would expect some price-wise correction. Otherwise, maybe index would consolidate and show some time-wise correction, whereas stock-specific, we may see some price-wise correction in the broader markets which we are going through.
Okay, so stock specific is what you need to focus on. Ruchit, specifically, if you see the markets on a sideways or a consolidative zone over the next 1 or 2 days, any particular stocks that you will be watching out for adding into the dips?
Samvardhana Motherson is one of the stock that is looking positive over here. So ideally today, if we see in spite of this entire consolidation or correction, the stock is holding quite well. Price up move supported by good volumes. RSI showing a positive crossover, and in the recent dip, the 40 EMA has acted as a good support. So this is one stock where one can look for buying opportunities for short term with a stop loss below 111. and expect targets around 125 to 127. So this is one stock which we are positive on, and I think one stock I would prefer on the short side, which is PVR Inox. So a lower top, lower bottom kind of structure in the recent pullback move. We have not seen any kind of buying interest taking place in the stock. And when the markets have corrected, the stock seems to have resumed its down move again. So here, the setups are a bit bearish on PVR Inox. So one can go short around 1380, keeping stop loss above 1408 and expecting targets around 1335 followed by 1310.
Okay, so two stock ideas coming in, Samvardhana Motherson as well as PVR Inox that you could be looking at currently. Let me discuss with you Zomato. That's the stock of the moment. It's down by about 1.1%. 159 rupees is what it is trading at. And there are reports that suggest 1 crore shares of a large trade worth 158 odd crore rupees has taken place as of now. About 0.12% of equity has exchanged hands on Zomato. How would you really look at Zomato currently?
So broadly, the stock has shown a good trended up move in last few months, and the broader trend still remains positive. But I think just because the stock has run up significantly and the momentum readings are a bit overbought, we can witness some no decline in the near term. But no, ideally one should keep a buy and dip strategy for the stock, and any dips towards 145 if comes, then the stock could form a good higher bottom around those levels. So I think if any existing long positions are there, those who are bought at lower levels, they can continue to ride this trend. And for fresh buying, I would suggest to look for buying opportunities on any declines towards 145.
Okay, fair enough. So that's as far as Zomato is concerned. The mid and the small caps is where the losses are aggravating even now. How would you look at the dips that are coming in? Of course, these are two spaces that have outperformed in the markets over the last 1.5 years. In fact, the rally has surprised many. Do you fear any sort of a bubble now getting into a bursting stage right now as far as the mid and the small caps are concerned, or would you raise caution here? Do you think this downward move could have a deeper leg as well? How would you really look at the move here?
Sakshi rightly said that last, I think, 1 year, the mid cap and the small cap index has shown a run up without any meaningful corrective phase. I think there was only one correction in last 1 year, in the month of September 2023, where we witnessed some corrective phase. Otherwise, no minor dips have also been bought into. Now there are some negative divergences, technically where new highs are not so in prices are not supported by newer highs in the RSI, and usually such any kind of divergences come leads to some corrective phases. So what we are witnessing in last two trading sessions, the selling pressure is more in the mid cap and the small cap space. So I think if anyone is a short term trader, then one should be a bit cautious. Expect some stock specific decent correction in next few trading sessions. But yes, this does not change the longer term trend. Buy and dip strategy should be kept. But for now, wait for some decent declines. For going for any kind of bottom fishing in the mid and the small space.
Okay, bottom fishing is likely to be avoided at this point in time in the mid and the small cap space. But any particular stocks that come onto your radar from the mid and the small caps in this kind of a dip? Are you looking at some stocks attractively?
So within the chemical space, recently Archean Chemicals is one stock which had given a breakout from a decent consolidation phase. So this is one stock where traders or investors can keep on their watch list. Any dips towards 700 to 670 range if comes, then that should be a good opportunity to create fresh longs over here. So not at current levels, but major breakout was when the stock gave a breakout about 670. So I think the previous breakouts usually tend to act as a support on dip. So 700 to 670, that with the range from the mid cap and the small cap space where Archean Chemicals would look much attractive.
Okay, so Archean Chemicals is something that you'll be looking at from this mid-cap basket. A lot of stocks that are buzzing. Samvardhan Motherson, as mentioned by Ruchit right here, is now up by 3% odd. It's inching towards the day's highest point as well. 118 can be looked at. So continue to watch out for this one. Indus Towers is buzzing again right from the morning trade. Havels is something that's been buzzing very sharply, 4.5% higher currently at day's high. Max Financials is another stock that's been buzzing 2.5% higher in trade. That's despite the kind of moves on the downside that you're looking at. on the overall market scenario. The stocks that are defying gravity, Havells, I'd ask you, last couple of trading sessions is something that this stock has really moved up after a long haul of consolidation. Brokerage house is turning positive as well. Is there merit in the move that you see?
Yes, the trend looks quite positive. It's not only today's trading session, but even yesterday we witnessed a breakout above that 1450, which was the earlier resistance. And last 2 days, in spite of what we have seen in the markets, the stock has been going higher, supported by very high volume. So, which clearly indicates a good buying interest in the stock. So, if any existing positions are there, better to continue to ride the trend. Stocks which outperform during corrective phases, usually that's where the real strength lies. And whenever the markets resumes the uptrend, no, then these stocks tend to show more outperformance. So any dips towards 1450, use that as a fresh buying opportunity. Existing long positions definitely should be held on.
Okay. Let's look at the market, for example. It's now at a day's low. So the Nifty is down by over 1%, 21,950 being tested on the Nifty. Sensex down 762 points. All the sectors down into the red, selling pressure aggravating as far as the overall markets are concerned. They are now at the day's low point as well. We'll continue to watch out for the market segments as well. So let's take each sector as is. Banking space, how do you really approach this space now? We've seen a stunning run up in the PSU banking space, the private banking yet to show up strength. How would you really approach these two pockets now?
So PSU's banks from a longer term perspective, I think if we get some more dip, then there could be a good buying opportunity in many of the PSU names. So I think the downside could be limited in the PSU banking space, except yes, the high beta names, the mid cap and the small cap PSU banks, which have shown a significant run up in last few months, I think they would see some price wise correction. But otherwise, the large stocks such as SBI, I don't expect any significant down move. So I think buy on dips approach could be kept for the PSU space. Within the private sector banks, still there are no signs of bottoming out, because if you look at the bank nifty index also, which comprises more of private sector heavyweights, then there is no sign of trended up move. Secondly, the relative underperformance can clearly be seen, wherein nifty has recently formed a new high, but bank nifty is still far away from its previous high, which it formed in the month of December and January. So I think this relative underperformance in last 2 months is clearly indicating that still there is not much strength or buying interest in the banking heavyweights, and since private sector we are talking about, so I think still there's time where one should wait for some sort of consolidation to get over before doing any kind of bottom fishing.
Okay, let's look at the kind of moves we are seeing in the mid cap space. On the upside, in fact, Ramco Systems, Coromandel International, these are the stocks that are buzzing despite this overall negative trend in the market. PVP Ventures 5% higher, Max Financials I mentioned, Ramco Systems is up by 2% odd. You also have LG Equipments at half or percent higher in trade. Some of those stocks that are still buzzing. However, on the losing side, you do have a lot of stocks that are coming under pressure, both on the Nifty and the Nifty Midcap as well. So Midcap space, HFCL, HOEC, Morpen Laboratories, PNB Gills, these are all nearly 5% down in trade. You also have stocks like BPCL, you have BPL kind of stocks as well. That's down in the trade as well. Alchem Laboratories, that's the one that is also slipping away. So some of these mid-cap losers in front of you as well. Let's now discuss some of the other pockets that have been outperformers of the past but are now showing you some dips. The realty space, for example, Ruchit, how would you really look at currently? This space has outperformed the sectoral indices in 2023. It was the top mover. Again, the last 2 months, this has been an outperformer. How would you look at the realty space? A lot of losers right there, about 5 to 7% kind of declines coming in on some of these realty stocks that have been rallying like never before.
So Sakshi, as we know, these are a bit high beta counters, where when the market trend is positive or when the cycle is positive for these names, they tend to show a good outperformance. But whenever the markets go through any kind of corrective phases, the down move also are a bit sharper. So I think since we have already seen a good run up over last few months, I think some sort of profit booking is taking place in the realty counters, and some decline in the Nifty Realty Index towards 850, 860 is quite possible. So this is not a change of trend that the stocks have topped out and we would see a downtrend again. But I think since readings are quite overbought and we have seen a significant up move without any meaningful correction, so some sort of retracements of the recent up move should be expected in the near term.
Okay. Any particular stocks that you'd be looking at over here that would be on your watch list?
Frankly, not at current levels. As I said, some corrective action if comes, then stocks such as DLF would be one stock where one can look for buying opportunities, but not at current levels. On any kind of declines, if we get towards 820, 800 kind of range, where major support zone would come in. So it's a bit deeper retracement that I'm talking about. But stocks such as DLF, Godrej Property should be on the list. Where dips can be looked as buying opportunities. But no, as I said, one should not be in a hurry. A significant dip is expected before the stock resumes their uptrend again.
Fair enough. The other pocket that has been definitely causing a lot of FOMO among investors was the entire rally in the PSU stocks. Now, these PSU stocks could be railways, could be defense, could be manufacturing led companies as well. How would you really, or maybe power? And some of these stocks were actually doing well in the morning trade as well. Some of them even at all-time high levels, say HAL, BEL, and the likes. How would you really look at these particular stocks now that some of these stocks have come down, say 10 to 25% as well from their all-time high levels that they had touched in the recent run-up? Is PSU is giving you some kind of an opportunity to buy into the dip?
So Sakshi, if we look at the price up move also, when they started their rally last year, many of the PSU names have already turned 2x or more than that. Right? So when the stocks have doubled or more than that in a shorter period of time of 6 to 8 months, and then if you get some 10-20% correction, that too from the on the higher base, then I think that's not a significant significant down move, I would say. But I think yes, in the short term, the PSU space, since it has seen a decent run up over last few months, some corrective action would happen over here. So I won't be in a hurry to do any kind of bottom fishing immediately. But as we earlier spoke about the PSU banking space, I think if one has to look for opportunities in the correction, then I think PSU banks would be one pocket where buying opportunities. No, one should be ready with a list of stocks where on correction, if we get stocks such as SBI, Union Bank, at lower levels, then one should look for buying opportunities in such stocks. But within the PSU basket, I think short-term corrections are much warranted because of the kind of move that we have seen in last few months. But PSU bank would be one pocket where on declines one should look for buying opportunities.
Okay, so PSU Bank is where you will be interested in buying the dips as of now. Apart from this, Ruchit, every time there has been a dip in the market, we've actually seen sectoral rotation take place, some of the other sector really taking the lead. Are you looking at such sectoral moves coming in after this dip has really played out? Some sector which has not performed thus far may actually come ahead and take that lead?
So most of the sectors, I believe, Sakshi, we have seen a good up move over last few months. Now that depending upon how the stocks would behave in this corrective phase, I think that would be more important to watch. So generally, what happens that when whichever sectors shows a relative outperformance, for example, if some sector has fallen by about 15%, but there is some sector which has corrected only by 5% in this entire corrective phase, then I think that relative outperformance is the one thing that one should watch out for. So at the end of this corrective phase, when we see a resumption of the uptrend, those sectors which have shown a good outperformance or that have fallen less, I think one should be prepared for a good amount of outperformance in the next leg of rally in such months.
Okay, fair enough. It's 3:21 p.m. A good time to take a look at how the markets are shaping up. So still down in trade for both the benchmark indices and also the Nifty Bank as well as the mid and the small caps right now. 838 points of a loss for the Sensex, 270 point of a decline for the Nifty right now. Then you also have the Nifty Bank that slipped 1.4%, 2% down for the Nifty Midcap 100 index. It's now near the 48,000 mark as well. Continue to watch out for this one. A lot of heavyweight sectors down in the red. Apart from banking names, you have the IT space that's down in trade as well. So that's the one that's down. Apart from this, it's the realties, autos, metals, all of them trending down in trade as of now. However, let's look at a few stocks which are most active by volume at this point in time. Well, you will find NHPC, then you will find PNB, South Indian Bank, Geo Financial Services, GMR Infra. These are the stocks that are seeing most active by volume. However, by value, if you see, then again, the most active stocks will be HDFC Bank, Geo Financial Services, Tata Motors, Indus Towers on the green side, Reliance now down. In the red, you have Mazagon that's holding up, Havels that's holding up among the most active by value at this point in time. The markets may be down, but there are still some stocks that are at their 52-week high levels. Let's look at those stocks. Rainbow Children Hospital, that's up in trade, and in fact, it's at a 52-week high level. Then you also have NHAI. So 15% uptick for Rainbow Children's and 1478 kind of a price. NHAI, let's look at that one. 4.3% higher, again at a 52-week high level. Force Motors, that's the one that's again moving up in trade, 4.3% higher. Policy Bazaar, 3% higher. V-Guard, 2.6% higher in trade, 52-week high. Krishna Institute, again, there's a hospital stock that's moving up. Aster DM Healthcare, 2.2% higher in trade. BEL, these are the stocks that are hovering near their 52-week high levels. Anything from this list that attracts you at this point, Ruchit?
I think most of the stocks have already seen a good run up, but within this space, I think Aster DM is one stock where consistent high top, high bottom structures have been are informing, and stock has a good support base around 40 EMA, which is around 440. So a bit deeper stop loss, but no, with the stop loss below 100, 440, one can look for buying opportunities no, in Aster DM.
Okay, fair enough. Let's look at the stocks that are, the hourly losers, the big losses coming in this last hour or so. GSFC, sharp downtick. Orient Refractories, sharp downtick. Surya Roshni, and these are all double-digit downward ticks that we are seeing. Deepak Fertilizers, RCF, that's one that's slipping away. These are the stocks that are showing sharp downtick, and they are the hourly losers. Paytm, again, a very sharp downtick coming in on this one. Sundaram Fasteners, Timken India, Balkrishna Industries. These are some of the stocks that are actually taking it on the chin right now as we speak towards the market closing as well. Ruchit, 325, would you give us any BTST or STBT trades for all the viewers?
So I think from a STBT perspective, no, PVR Inox, which we spoke about earlier as well, one can go short on that as well. So we can expect some no gap down opening in case if the stock breaks that previous recent swing low of 1347. So PVR Inox looks bearish. Apart from that, even IndusInd Bank is looking bearish, where one can look for STBT trades over there. So ideally, we have seen some consolidation recently, but that has resulted into a bearish pennant type of formation in IndusInd Bank. So price up moves or pullback moves were not supported by any kind of rising volumes. Stock has even not surpassed its 40 EMA resistance. So IndusInd Bank, one can go short over here, keeping stop loss above 1470, expecting targets around 1400 first. And in case 1400 breaks, then 1380 could be expected.
Okay, so PVR Inox, IndusInd Bank, the STBT candidates from Ruchit for today. We are just about 4 minutes from the day's close. Let's again look at the markets. 267 points lower for the Nifty. 1.4% declining trend on the Nifty Bank right now. That's down 659 odd points at 45,925. Then you also have the Midcap Index that's lost over 1,000 points in trade. So over a 2% decline. It's now inching closer to that 48,000 mark and testing that. Let's keep an eye out on that one. The Pharma Index is down by 0.6% in trade. So you do have a lot of healthcare names that are declining. So about 0.6% of a fall for the Nifty Pharma Index. The metals are taking it on the chin, 2% down, coming in on the metals pack as well. Then you also have the real estate space. That's again almost 2% lower in trade as well. So these are some of the sectors that are falling very, very sharply in trade today. You also have the auto index that's 1.9% down. The PSU banks that's down by 2.4%. Those are the sectors that are really taking it on the chin. Oil and gas down by 1.9% as well. Rujit, we've had a strong move on the oil and gas space, the energy space that has been an outperformer, be it the upstream majors or be it the oil marketing companies as well. Is the best of the rally behind us in this space?
Frankly, not yet. I think the broader trend is still quite strong. It's just that the short-term correction could be seen when the markets correct. Since these stocks have also seen a good run-up, but stocks such as Reliance Industries or ONGC or even Oil India, I think these are the names where in case if we see about 7 to 8% corrections, then I think good amount of buying interest would come in again in these stocks. So if one is looking from a mid to long-term perspective, then I think oil and gas space, especially the upstream companies, seems quite positive, and declines in these stocks should be used as a good buying opportunity.
Okay, last 2 minutes to go before the markets shut shop, Rujit. Let's prepare for tomorrow. What would your advice be to all the traders and investors, both on the index level first, Nifty Bank, your strategies for tomorrow?
So I would be a bit cautious on the markets. Today we have seen that 22,000 was the important support, 22,000, 21,950 range, which has been broken, and markets are about to close below that only. And if you look at the RSI oscillator on both Nifty as well as Bank Nifty are negative. So we could see some sort of corrective phase. So it's better to be a bit cautious and avoid any kind of aggressive positions on the long side in the market. For tomorrow, 21,730, I think that would be the next support level to watch out for, where 40 days EMA is placed for Nifty.
Okay, fair enough. Well, on that note, thanks a lot, Ruchit, for being with us onto this special edition and helping our viewers really navigate through this downtrend in the market that we are witnessing. But some more consolidation, more cautiousness to be, had over the next few trading sessions. And of course, it will be the monthly expiry and the leap year day as well tomorrow. So it will be important to track the market moves as well as the global cues as well. Many thanks, Ruchit, for being with us. Let's start winding down the markets for all our viewers then. So you do have the Nifty and the Sensex that's ending lower in trade, remember, after a day's gain. But that's exactly how the markets have played out this entire week thus far, and last few trading sessions of the last week as well. A day of gain and a day of loss, and that's exactly how the markets have played out. So, that's exactly how you're seeing the markets. 21,924 for the Nifty, down 274 points. The Sensex at 72,265, down by over 1% and 0.1. Then apart from this, you do have the Nifty Midcap 100 index that's down by 2.14%. And at 47,992 now, it's tested that 48,000 level, slipped lower. The small cap 100 index down by 2%, 44,977. You do have the Nifty Bank now that's slipped lower in the last few minutes, 1.5% lower. 45,909 can be seen on this one. All the sectors of the Nifty are ending with losses in trade today. So sharp cuts coming in on the Realty, on the metals pack, on the auto basket, as well as on the media stocks as well. 1% or so loss coming in on commodities, consumption stories as well, energy stocks, all of them really down in the red as well. And all the sectors, really there has been nothing, only the consumer durable space that's been flattish with the negative bias. Rest of the sectors have actually seen sharp bouts of selling pressure. Vodafone Idea down 13.8%. That stock has taken it on the chin today. You have stocks from the mid and the small caps. There are also the top losers. So Power Grid, Apollo Hospitals, Bajaj Auto, Delta Corp, Z Entertainment. These are the stocks that have actually slipped in the red. From the Nifty, you have Eicher Motors, IndusInd Bank, Maruti, HPCL. These are the stocks that have fallen over 4% in trade. Godrej Properties from the realty space, 5% or so lower. What stood out is a stock like Havells, for example, Pfizer, for example. These are the stocks that have held up 4% odd or so in trade today as well. So that's how the markets have shut shop today. But keep an eye on all the cues that will be important for you to track throughout the trading session tomorrow as well. Ruth clearly has mentioned 2 STBT trades, and he's also mentioned that cautiousness needs to be prevailed even in tomorrow's trading session, a couple of more sessions where there could be extended amount of consolidation. With that, we wrap up this special edition. Just one more stock I will mention to you before we shut shop, and that is Juniper Hotels. That stock got listed at a tepid premium, listing in trade today around 361 odd or so, but it inched up higher during the trading session. It's now ending with 11.5% of a move. So over 400 kind of levels being seen on day one for Juniper Hotels. So with that, we wind up this special edition for all of you. Do stay tuned on to Market Today and on Business Today Television. A whole lot of action continues on your screens.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
The Supreme Court cracks down on Yoga Guru Ramdev's Patanjali Ayurved. The top court on Tuesday came down heavily on Patanjali for issuing false and misleading advertisements. The court, in an interim order, restrained Patanjali from publishing any advertisements that claimed that their product can cure diseases listed under Drugs and Magic Remedies Objectionable Advertisements Act. The two-judge bench of Justice Hima Kohli and Justice Asanuddin